And I know we have a love-hate relationship with these banksters like Jamie Dimon. He says the Fed has lost control of inflation. Well, it's really not the Fed, but and this is where we all struggle, right? Banksters, and when he was saying, this was 6 months ago, listen what he was saying just half a year ago, and I was like, I think you should listen to him. I think he's actually right on this one.
It's a hurricane. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way.
Okay, that was a half a year ago when I'm like, yep, inverted yield curves, all the things that we see in the macro, this isn't looking good. All retail is like, we got this, man. Yeah, let's make some money. And he's saying no. And I know sometimes it's mixed signals and you got to read through the tea leaves. Just subscribe. I'll do the reading for... No, you learn on your own. You got this. You can do this. Just kind of understand what I'm saying. Diamond, breaking news, says the U.S. economy is facing some scary stuff. So 6 months ago, he saw the hurricane. What he saw was correct. Now we have scary stuff. JP Morgan CEO lists include Fed, Ukraine, energy, and China. I can cover all those in the charts. Ukraine, we always have. Which war should we go to now? Huh? Who's going to line their pockets? Fed, complicated. Energy, I told you where we're going with that. China, central bank will have to pause rate hikes, Dimon says. And as Bravo says, that 2-year yield that I talked about on Friday is getting out of control. It's almost at 5%, and the Fed has to chase it. And everyone thinks the Fed's in control, but it's the bond market that's in control. I'm pretty sure Jamie understands that. And when it comes to your energy play, like oil, which feeds the economies, which it's like, hey, are we doing good or bad? Well, is Pop out there driving the car? Nope. He's tightening the belt. Oh, oil goes down. Oil has been going down. We're under the 200. We've been falling. It's in a pattern that actually drops even more. But on oil, and I don't know if you can see this with your eyes. There's the 200. We're underneath it. That's bearish. That means oil's going down. If you want to learn how to do this is my bear market course, how to make money going down. When we get above the 200, that's my bull market course. That's my swing trading course that I taught in high school, how to make going up. It's easier to fall upstairs unless you're Joey B. It's kind of hard to, you hurt yourself going up too, than it is downstairs. But I have a price target way down there on oil. But if you want to see like what my eye sees, that maybe normal people, I'm not saying you're not normal, but people cannot see, and you're actually you're gonna break it soon. Oil's coming into this little triangle. Which way is it going to break? My guess, it's always probabilities, it's going to break lower. Also, if you want to learn how to do this, all of my courses, $199, 4 payments. You get everything from starting businesses, everything you can learn. When do I draw the line down or do I draw the line up? Rather than looking at fundamentals and going like, oh, I should probably go all in on that. Honestly, this play is I don't know. It's more so slanted to the downside, okay? Because we're underneath the 200. We pop above, For me, my gut's always, it's probably a false breakout, throw over, but I'll make some money on the way up, close my position, let's go, baby. It's kind of what I did on the S&P 500, right? Went up, I closed my position, I took profit, went down, went up a little bit, everyone's like, bravo, you said the market's gonna go down. I'm like, wait for it, 3, 2, 1, I told you so. Also, just looking at this chart, do you guys see, can you see what I see? Look, here, let me draw another trend line for you, see? If it breaks that, it's going to go down, okay? So that is my take on, well, that's energy. You trade it, and you make your digits go higher. And then you don't have to listen to these guys, even though it's helpful. I kind of want to know, like, what are you saying? What are you saying, Jamie? What do you got? Anything good right now? Hold on. Let's listen. Let's take a little peek.
There's something wrong because maybe that's too short a term. Okay. Maybe we'll...
Never mind. That was funny. I did not know. Jimmy, what are we doing today, Jimmy? I am ready. What? Give us. We are in the market too. Yes, we are in a bull market. Everyone buy. Come on in, retail. I want to interview both of these guys. Can I do that, please? I'm not going to. Probably wouldn't bode too well for CNBC. They're like, Bravo, you can't talk like that. I'm like, well, I kind of have to. It's kind of like when I had Robinhood CEO. I had an interview with him. Could not air it. They would not allow me. It was not. I did not ask the questions that I was supposed to ask. Jamie Dimon says the Federal Reserve has lost a little bit of control of inflation. They don't control inflation. Control the federal funds rate in between banks. That's all they do. The bond market is what is in charge. It's like every year we get something new that people are like, oh, the Fed this, like over the last few years, Bravo, please calm down, take your meds. Over the last few years, people are like, Fed go burr, right? All the channels, buy gold. And what I'm trying to do is, like that money machine that's like, Fed go burr. I'm like, Fed don't go burr. They can't go burr. Oh, Bravo, that's why the price of eggs is going up, because Fed go burr. You don't get it? It's okay, you guys, if you want to believe what the Fed says, which is kind of like an oxymoron, or maybe that's a little difficult for you to say, because everyone hates the Fed, right? But you're believing them? See, if you hate someone, they're probably a liar, and you don't trust them. So why are you trusting what they say? When they go on CNBC and they're like, essentially, yes, we create money. No, essentially, Jerome, you can't do anything about inflation, which we're seeing. Now, finally, I'm like, you see, the chickens come home to roost. I don't even know why I use that analogy, but I've showed you that central banks, Japan, all these things that they all say of like what the Fed can do and how markets move and blah, 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 this and that. Japan has proved it all wrong. And actually, inflation, for the most part, is supply and demand, and whether or not you'll pay for it, it's just, ugh. Investors. Oh, maybe. What are you, an investor? You piling into cash? I've been for a while. Investors piled $354 billion into cash since Ukraine war, B of A. What does that have anything to do with the Ukraine that we're all piling into cash? I'm piling in cash because I'm like, I buy, I sell. Oh, I have cash. I wait on sideline, I wait to buy again. I then take that cash and I move it into equities, I buy, sell, or I move it in gold, or I move it into silver, right? Or I move it into crypto, not yet. Or I move it into the bond market, I move it in the dollar. I mean, there's just, money always has to be moving. Or like the 6-month yield, which is at almost 5%. I mean, 1 year's at 5%. Come on, you guys, let's make some, well, I guess, can you make real money if I tell you to go buy bonds? Or is that just financial advice again? Okay, just paper trade it. But more stuff. He wants to touch my finger. Oh, there we go. More stuff from Jamie. Sorry, my brain. Jamie Dimon says a soft landing is possible. I don't see the word it's not. Wait, hold on. I'll fix the article for you, Market Insider. Jamie Dimon says soft land, not possible. But scary stuff is ahead. You cue the fire. But then he's very vague. JP Morgan, soft landing, not possible, on several uncertainties. What? Federal Reserve. Okay, yeah, okay. Every time, I'll give you this one. When we're in a quantitative tightening, not to say that, let's just pretend it has nothing to do with anything. But ever since we ever have had quantitative tightening, okay, probably the bond market, not buying the thing, things go down. So what we need to do is make lots of bonds, okay? Everyone go crazy. Use your money in your bank account so they can buy the bonds, put it on the Fed's balance sheet. Interest goes back over to more of that. Let's go do that. But I do agree with him that there is a hurricane. Well, we're kind of in it. But I just say, oh, hey, so we can make money going down. I mean, tell me you weren't kicking yourself in the face when I launched my swing trading course almost within a day after we were above that 200. And everyone's like, how do we make money from them? I'm like, okay, we swing trade all the way up. And then I said, okay, now we all get out. Okay. And then I had to launch my bear market because you're like, wait, I don't know how to make money going down. And I still get emails. How do you do it? Honestly, you click one button, okay? And then you click the sell button. I mean, unless you're on Robinhood, then I think it says short. And then you make money going down. You just have your brokerage account and everyone's happy. So now we are in that down cycle, and hopefully you're taking advantage of it, even though those bear market rallies really right in the coin purse. That's why you need to understand patterns to take advantage of it. Rather than in the coin purse, you're taking advantage. And then it sells off. And then you're like, okay, here we go again. Whack-a-mole. Also, when it comes to whack-a-mole, I don't hit every single one of them. But at least I'm playing it, right? Hey, okay. I got 7 out of 10. Pretty good. And then you miss one. They're like, hey, how's that TLT play? Even though I told you this is a Head and Shoulders, this is where it plays out. That was in the comments section. That was classic. Thank you. That is called when the teacher, right? The student surpasses the teacher and you're like, Mr. Bravo, I have a question. And also the other plays. Like if I ever do a sponsored video, they're paying me. Like just to, and then we do the TA on it. I don't know. It goes up, it goes down. A lot of times it goes down. You have to do your own due diligence and go, oh, it's going to go down. I put in or wait for confirmation. Please don't, just because someone, does a sponsored video like, oh my gosh, look at the cool fundamentals. We don't trade fundamentals. But I love it when they give me something that's actually a cool pattern. I'm like, woohoo, this is fun. And I get them all day long, every day. My email box is full. And I look at them like, nope, delete. But you guys, back to you. Apologies for this. As emergency savings drop and credit card debt rises, an ugly stew. What's an ugly stew? Okay, any stew is ugly, right? An ugly stew is brewing. It takes an advocate to figure this out. When you have credit card debt at a historic, like before the birth of Christ, it go back to Noah. That's why he got on the ark. He's like, this is it. You guys are way out of line, totally in debt. I'm getting off of this island. You guys are crazy sauce. Have a nice day. So you are currently, you're beating back in the Noah times. That's it. Debt up, savings down. This won't bode well. And Jamie Dimon is right. But all of these things just take time to play out. And it's playing out, right? We're just hitting branches on the way down. And what's going to save us? Oh, a strong as hell economy. Okay, economy based on what? Is it our manufacturing sector that's just booming? No. Is our housing market that is booming? No. Stock market booming? No. Crypto? What is booming? I think everything's booming. Actually, you went from ballooning to now booming, right? But booming in a bad way. Like if they put a boom boom underneath your bed and it's like, I don't know where I was going with that. My brain said, this will be really funny, Bravo. Try this one out in your brain. It didn't work. America's massive debt pile is a cry for help. You just had it all paid off. You did. During the pandemic. They're like, here, have lots of stimmies. You got to pay that back in your taxes, by the way. Oopsies. Forgot to tell you that. That's kind of how it works. When you create a bond's created with interest. Right? They give you, the government's like, oh, you'll vote for me? Okay, here's some money. You just got to kind of pay it back. That's all. Or your kids do, which is really ethical. Good job. Taxing the rich alone won't bridge the deficit gap. Everyone is going to have to pay more. Why is that? Because it's a debt-based system. Duh. You create anything in this system, it's with interest. You want to create one of those? Create a bond. You want to create a bond? Create a bond with interest. Got to pay me 5% on that, though. Or if I walk into a bank. See, there's different ways of creating money. And I know. You guys always push back. I know silver and gold is money. But this is not the system that I don't go to my store and be like, hey, can you take that? They're like, what's this? They don't do that. We have this cool little system where it's fugazi, where everything's just loaned, right? You walk into a bank and have $1 million? Sure. Poof, got created out of nothing. If you ever want to stump your friend, ask him where money comes from, 98%. Because yes, I know, there's Bitcoin, there's gold, there's silver, all different ways that people call money. It could be on my island, it's different than Jeffrey's Island, it's going to be seashells. No, you can't bring any kids because we don't like kids. I mean, grandkids are okay. You can bring the grandkids. Those are okay. But then we got to get a boat to send them back. Anywho, back to how bad it is and how do you feel about it, not what the politicians tell you. There was a poll conducted this month, found that 87% of you, of respondents, were concerned about the economy and inflation. Yes, because it's all bad. I mean, if it wasn't bad, there wouldn't be a poll where 90% of you are like, wow, this is really bad. Who's going to fix this? Yeah, you can't fix it. Actually, you're really not going to like the answer on this one on how to fix it. Create more debt. That's it. That's what you got to do. Go into more debt. It's a debt-based system. That's how economies grow. You go to a bank, you want a loan. Oh, our economy's booming. People aren't going to banks and getting loans. So that would be step one. Start creating lots of bonds. Okay? You got to put that money printer to the press, to the ground. Put the pedal to the metal, Janet. Create lots of bonds. Take that after you've done that, after I buy that bond, because that's what I have to do, or your bank buys that bond, because that's what they do. They buy bonds with your money. Why don't you just beat them to it and make the 5%? But then they can cut people checks and say, here's a check. Go spend it in the economy. Economy grows. That's how economies grow. It's based on debt. I know it's not right. Your taxes go up. Everything's miserable. My apologies for that. I was not the one who created this. But I mean, I guess there is a silver lining in all of this, which is crazy. From the Democratic Party that's in charge, your taxes they're not getting it. Here's where the surge in January spending as crunching through the numbers. Inflation came from biggest tax drop in history. That's because we're in a recession, and no, you're not getting any money out of me. Oh, and just in case you want to look at what it looks like, your personal current taxes, I know you like it goes right into your hair. Well, if I move it and then I move it there, and then it goes under your shoulder. Look at this. Look at that. Personal current taxes. And that's what I've been like, what are they going to do? Where are they going to get the taxes from? Right? We're not doing good. It's like when everyone leaves California. Hey, Gavin, did you ever think where are you going to get your money from? Oh, we'll just keep raising it with the people that are left over. It's sad, but I guess that's how the system is all plays out. And also this is sad too. The grandkids, our kids, younger U.S. consumers struggle more with loan repayment than older cohorts. Well, that's probably because they didn't teach you about this. Stop going into loans, right? Well, then you're going to ruin the economy. So there you go. Never mind. Skip that. Go buy lots of stuff. Know that you're going to have to pay it back with interest. Just like you always do, because it's a debt-based system. But now it's 20%. Oh, that car loan. Whew, that's starting to get painful. The credit card at 20%. You have the highest credit card ever, and it's at the highest rates ever. This is so sad. But I warned you, right, a year ago? I'm like, stop, credit card. I kept saying, credit card, stop. No. Whatever you can do. Don't go on that vacation. Oh, that would slow the economy now, wouldn't it? But thank you guys for, take advantage of it. I got to raise these prices Sunday. This is about it. So if you wanted anything, get it now. Prices go up. Love you guys. See you tomorrow, because I work every single day of my life, and I love it.